Dilhan, let's start with the basics. Why are Temasek and BlackRock joining forces?
Erik, thank you for that question. I think BlackRock and us share a similar view of the role of private investors in doing our part to help with the carbon abatement process. And we think that there's a role for private capital to join with others in seeking to substantially reduce carbon emissions, especially for the rest of the decade and beyond. I think Larry shares the same vision, and so do we, that this is an important thing for private investors such as ourselves and BlackRock to step up and do our part to catalyze change in this area.
Larry, by now, every CEO and every investor is aware of your thinking on climate change. It's an investment risk that fiduciaries have a duty to address. That's the big problem. Let's think of climate change as the big problem. What problem are you specifically trying to solve with a venture capital business in decarbonization?
To properly address the whole issue of decarbonization, we're going to have to develop new technologies. We don't have many of the new technologies today, or we have the technologies, but those processes, whether it's cement, green cement, or green hydrogen, or so many other things that emit carbon, the cost to do it green is very expensive. And to truly get to a net zero world, it's way beyond electric vehicles, solar and wind. But solar and wind is a very good example, Erik, of it took 30 years to bring down the cost of solar and wind, so it's commercially equivalent in price to hydrocarbons. Let's face it, hydrocarbons are very cheap. Hydrocarbons are cheaper than a bottle of water. And because of that, the world economy has blossomed the use of hydrocarbons, and we've seen great prosperity. So for us to truly conquer a net zero world, we need new technologies. We need new innovation. Bill Gates' new book speaks about this loudly, the need for new innovation. The world is emitting 51 billion tons of carbon every day. So we're going to have to reduce carbon by 1.7 billion tons a year. We're not going to do that by just having electric vehicles and wind and solar. We're going to have to find ways to bring down the cost of new technologies to conquer the other emitters of carbon. We're going to have to use new technologies to find ways to store and recapture carbon and store it, and so we have a better world. So we believe that investors worldwide are not only interested in obviously capturing the green opportunities, the sustainable opportunities across from the growth area to all the way to I would say the most common infrastructure investment like wind and solar. As I said in my last letter, Erik, I said the transition risk is a transition opportunity for investments, and this is a great example of partnership between our great partner of Temasek and BlackRock.
Dilhan, a few nuts and bolts questions, if you don't mind, so people have a sense of, call it, scale. What are each of the two partners bringing to the table here? Will the joint venture have its own staff? How many people will be involved? That kind of thing.
First of all, I think we complement each other in many ways. BlackRock has an investment arm, and so do we. And we've been investing in early stage companies for decades. And we stepped up our investments in early stage companies in the last decade, and today it constitutes a sizable part of our portfolio. We're now focusing our investment activities across a broad range of sectors where we think we can make a difference, and where they too can make a difference to reducing carbon emissions, especially as we aim for net zero world in 2050. Now, BlackRock has incredible strengths to bring to this joint venture. They have a very strong data analytics model as embedded within their Aladdin system. They have the ability to source the like-minded investors to join with us in this foray. But they also have access to many companies which are able to not just bring solutions that we think are needed, but also companies that could be test bedding these solutions. And so we think that this is a joint venture that will achieve many of the objectives that we hope to see in this partnership.
And Larry, who does the deal sourcing here? Who approves the investments?
We will have a joint investment committee. We will be working together in picking the investors. There may be some investors existing at BlackRock. There may be some investors existing at Temasek. But I think one other major point that I want to reiterate what Dilhan said. At the same time, BlackRock is investing large sums of money on data analytics and sustainability. We believe this is the key. And we believe this is one of the most important growth developments for BlackRock for its entire organization. The investments we're making on the analytics related to sustainability and transition. And so through those analytics and data, through our joint ability to source deals, through our ability to attract great investors, I believe this is going to be a great opportunity for us as investors in focus on the decarbonization of the world, but a great opportunity for new people to join this joint venture. And we're very excited and we're very committed across the board. So we are both investing money into this into this new enterprise, but around that, Temasek, as Dilhan said, has a great history in early stage investing. And BlackRock, with our investments, plus our technology in analytics and in investing, I believe this is going to be the foundation of a large-scale operation for us.
Dilhan, tell me, what does success look like for this venture? Are there, call it, KPIs? Is there a targeted return? And a key question I'll add to that, are you willing to accept a lower return or take on more risk in order to increase the impact on carbon reduction?
I think the first objective that we seek and for which success should be determined by is the evolution of innovative solutions in the decarbonization process, or what I would call the carbon abatement process. And if these solutions can bring down the carbon abatement cost curve such that we will see commercialization and implementation, I think that's the first sign of success for this joint venture. And tied to that, of course, is the need for financial returns. In order for this to have a journey where it can go on for a significant period of time, we have to be disciplined in how we make these investments and to be focused on getting the right returns so that we can crowd in more capital into this space and encourage others to do likewise as we are choosing to do in this joint venture. So I would say that we are not going to look at sacrificing returns in this area. We believe that at the end of the day, the returns will come. We may have to wait for a longer period given the early stage element of this partnership, but we do believe that the returns will come, as we've seen in other sectors that we've invested in at an early stage. And
can we put a number on that targeted return?
Well, we have a targeted return in line with most early stage funds, which is about 20% IRR. And so we're seeking to get that over a reasonable period of time.
But Erik, let me add, like all new technologies, some will work, some won't. Yeah. Some will be more effective, some will be less. This doesn't mean we're not going to have investments that just don't pan out, and that's the nature. But this is not, I look at the transition risk as an opportunity, and an opportunity for commercial returns, but also focusing on making the world better. And I do believe innovation in technology has really led the way in transforming the world. This video call is a great example of new technology that we didn't have 5 years ago. So we're working differently, we're communicating differently. And so the key is way beyond building out infrastructure like the Biden plan has been proposed. It is really about development of new technologies and new applications. And as I said, some are going to work out and some are not. But there's no reason why we should not think about a 20% return. But that doesn't mean all of them are going to turn out that way. Some are going to be maybe multiples returns, and there are going to be a number of them that are going to be a write-downs. But and hopefully we have few of those. But that is the nature of investing, and obviously the foundation of all the nature of investing is understand the science around the technologies.
Larry, part of the plan here is to raise money from other investors. And if you're successful in that endeavor, how big do you think this could get in terms of AUM?
I think our first, I would say the first pool of money should be no larger than $5 billion. We're going to be testing this. We're going to be building it. We have proof of concept, and then we'll see. And a $5 billion early stage, late stage fund is a large pool of money. So some of the investments are going to be quite small, and some of the investments will be much larger. But the key is working with new technologies, and importantly, some of this might mean working with traditional hydrocarbon companies who have the science and understanding the science around, let's say, hydrogen, and can we partner up with them as they start creating new processes for green hydrogen, and so there are many things we could be doing together that require bigger pools of money. But in terms of what we're trying to do this is not a large fund. This is not tens of billions of dollars. It may lead to those type of large scale investments, but it does not need to be that large scale in the early beginnings of this venture.
Dilhan,
Erik, could I just add a point?
please jump in.
I think the way BlackRock and Temasek are looking at this is that we believe that our financial capital will operate as catalytic capital to catalyze change and for value, to catalyze new solutions that could be made available to existing industries, to ensure that the hard-to-abate sectors like transportation, industrial processes, built environment, can have solutions that will contribute towards the reduction of emissions. So as we aim for a net zero world in 2050. And I would like to think that both BlackRock and ourselves would be part of that process to catalyze the change that we need to see to achieve the objectives that we all have.
Dilhan, let me ask you this. There are a number of firms that specialize in early stage investing in the climate change arena. BlackRock is the largest asset manager in the world. Given the choice between those two, why go toward BlackRock as opposed to somebody with more specialization?
We've had a relationship with BlackRock that goes back a number of years. We have joint ventures with them in other areas. We have a good relationship with Larry and his team. I think we understand each other. And when you want to do something like this, which is a multi-year commitment, you do it with people that you know really well. And you want to do it with a shared objective and with shared outcomes. And that's what we're seeing here in the partnership that we're putting together.
Let me add a little more, Erik, on that. I mean, we have a great partnership together in China that we're building an enterprise there. Temasek is one of our largest shareholders of the company. We have consistently shared information about opportunities together away from any specific investment. Like any partnerships in life, partnership professionally, Partnerships work when there is a common culture, when there's a common belief. And as Dilhan said, the shared belief in terms of sustainability and transition risks to transition opportunities are key components to making the partnership work. We spend way too little time focusing on, do we have common beliefs? Do we have common cultures to make this work? It's, and to me, success, and I would clearly state the success of BlackRock is on the foundation of our culture and our principles. And the culture and principles are totally shared in the ethos and the foundation of what Temasek represents and what it represents for the whole country of Singapore. And so I look at this as a natural, easy partnership. And you're right, are there other companies that are further along on this? Yes. But 2 years ago, people said BlackRock was late to the whole idea of sustainability. And in the liquid markets, we're now the leader in this. We are becoming the leader in the analytics and data. Historically, when we put our mind to it, when we put our focus on it, we do achieve what we tell our investors, what we tell our shareholders, what we're going to do. And I could say loudly, we are very committed in building this enterprise to be a world-class leader in sustainability and decarbonization.
There's an obvious follow-up question for you there, Larry. People look at BlackRock and see a leader in liquid markets. They see a leader in late-stage or mature private investments. Early-stage investing, whether it's venture capital or growth equity, isn't what people would call BlackRock's wheelhouse. Why do you think you'll be successful here?
7 years ago, said our wheelhouse was not in alternatives, and now we're the 5th largest alternative investor across the board. We have been a leader in sustainability, as you said, late-stage liquid markets. But even yesterday we announced a active ETF in the whole decarbonization and opportunities we have, and we raised the largest pool of money in this. We announced earlier in the week we raised another $4.8 billion in renewable energy. We put the firm behind a belief that this is where we want to take the organization. We said 2 years ago that climate risk is investment risk, and there's going to be a tectonic shift in this. We are seeing the tectonic shift, obviously, in the liquid markets and all that, but we believe the greatest opportunity for the transition is going to be in early and mid-stage investing, and so this is just a natural adjunct to what we are doing. Erik, I heard the same questions about 30 years ago when we were just a bond manager, and they said, how can BlackRock get into equities or other fields? And we generally do a pretty good job when we believe that we have the resources within the organization. When we have the whole organization behind it, we've been systematic. We've been, in many times, late but determined. But I do believe we are going to be very successful. And I'm very excited about putting BlackRock's muscle, BlackRock's culture behind this.
Dilhan, one of the big challenges in any climate-related investment is the need to overcome the so-called green premium, right? The alternatives to fossil fuels are often just more expensive. And in many cases, not viable in terms of commercial uptake as a result. Will this venture invest in green technologies or products that raise costs, or is that a red line for you?
We have to expect that as you look at the transition to greener options, there is obviously the need to address the gulf in the cost between what's available today and the cost curve of those solutions. The idea is to accelerate the abatement of the cost curve. That's why private capital is required to be put in place together with other forms of capital available to give these solutions a chance of making it to commercialization, where the cost curves could be brought down to where it is at the levels at which we see the non-green options which are available today, or even lower. Now, we saw that with solar. As Larry mentioned, it took solar and wind 30 years to come to where it is today. But in the last 10 years, the way in which the cost curve has come down incredibly was something that many didn't foresee 10, 12 years ago, and yet it's happened. There's every reason to believe that if the right amount of capital, the right level of incentives and disincentives are put in place to encourage a transition to greener options, that we will see the cost curves come down to a level where it's commercializable and there is an ability to have it implemented in sectors where it would otherwise have been difficult to bring those solutions to bear. And I think that's something we should be striving for. And this venture is playing its part to do that.
Dilhan, what you just described may take years. Scaling these technologies and the companies behind them is a years-long process. How long will your investors have to lock up their capital?
Well, it's an early-stage fund. So as an early-stage fund, typically you have a time frame of 10 years plus one plus one. Yeah. And we haven't decided what the terms are fully, but we expect the fund to have the life of a normal early-stage fund. And it is a question of putting money to work at different stages. There'll be early stage, there'll be growth stages. Some of the companies may well accelerate faster than the others. Some may fail, some may succeed spectacularly, as Larry said. The most important thing is to figure out which are the ones which are likely to make an impact in the sectors which need these solutions to be present, and to focus on these companies and to make sure that we back the right management teams, back the right sponsors, join with other investors, and bring in more capital, through our networks to these companies which are promising, and then hopefully seeing those solutions make their way into the marketplace and be part of a normalized business model.
Larry,
Erik, let me just add. Erik, let me
yes.
add one thing. Right now, there's huge demand for some of the, I would say, green products like biofuels. We just don't have enough capacity in our country right now in the United States to manufacture biofuels. Right now, biofuels are about a 30, depending on the location, to 50% premium over traditional hydrocarbons. If we had more capital to build out these plants, I believe the green premium would go down dramatically. Green hydrogen. So it's a lot of it is capital, because I would tell you, if we had green hydrogen today, if we had biofuels closely approximating regular distillates and regular fuels that are hydrocarbon based, the demand's there. And so now it's just the technology, some innovation to get it done, but I don't think in some of these areas that we're talking about are 10-year horizons at all. They're probably closer to 5, but there could be some technologies that we haven't even thought about yet that are they're going to be shorter. Focusing on simultaneously with the infrastructure plans that maybe the U.S. government's focusing on, that working on early stage technologies alongside building out the infrastructure for a more renewable world. This is a perfect time to launch this fund.
If this fund will have $5 billion to put toward those technological challenges, green hydrogen, biofuels, and the like, tell me, what do you think, Larry, needs to be marshaled in terms of capital to solve those and some of the other really hard problems like green cement and green steel?
Yes. And both of those cost anywhere to 30 to 50% above what it would cost for the utilization of hydrocarbons. So those are other two examples that are very costly. And both cement and steel produce about 10% of the carbon footprint in the world today. I think what's the most important thing we need to do is making sure that all society is believing that we need to move rapidly. I've been saying very loudly related to BlackRock's role in helping and moving companies forward and becoming, more prepared for transition risks. In my conversations with policymakers worldwide, we will accomplish many of these much more rapidly if the world says this is a societal issue that we have to do it all together. If governments and policymakers just only ask public companies to move forward, we're not going to move as fast as society. But if government worldwide, especially in the upcoming COP26, if governments say this is a societal risk and every form of business operations needs to participate and move forward, then I believe we are going to see an acceleration in technologies, an acceleration in innovation. And so I'm actually very excited from what I'm hearing from regulators and their desire to move forward. I'm very excited actually hearing from many CEOs. I would tell you some of the most reluctant CEOs now of public companies are moving more rapidly than ever before. So I'm putting on my other hat on more on what we do on corporate stewardship and liquidity, but that gives us the insight to help us now in the new stage and early stage investing. But I do believe we are going to rapidly move forward as a global society in addressing these issues. We must do it because if we're going to really get a net zero world, we have to, as you asked a question earlier, Erik, we must bring down the green premium because we're not going to get to a net zero world unless it is a just transition. We're not going to get to a net zero world unless we can find we can bring down the green premium so every part of the world will be able to afford to have economic growth and doing it with sustainable green energy. And so to me, this is critical. It is critical if you are a globalist. It's critical if you are a world believer. And so to me, this is something we must do. This is something all investors should do. This is something that actually all corporations, public and private, must do.
Erik, can I maybe add something to what Larry has said? I think many investors like Temasek and BlackRock have been making investments in sustainability-focused sectors. We have a particular focus on 7 areas that we've made investments over the last few years: food, water, waste, energy, materials, mobility, and the built environment. We have seen how early stage investing has allowed for some of these new solutions to become more acceptable. If you just look at alternative proteins, for example, the first major investments were made in 2013, 2014, and today you're seeing it part of the mainstream marketplace in the food sector. Likewise with energy. Now, there are estimations of when green hydrogen may become commercially viable. But we're beginning to see reports which suggest that it's going to come sooner than that. It's a question of making sure that there's enough capital to be put in for the solutions that will be able to be generated to allow for green hydrogen to become more viable in a time frame shorter than that which people have predicted so far. And we believe that with our venture, we're playing a part in bringing that capital to bear, and we hope others will do the same as well, either with us or even other pools of capital that can emerge to be put into these ventures side by side with us or in competition with us. I think that's yeah. Sorry?
Continue, please.
Yeah. So I think that's a goal that is one which all private investors should I think aim for. to really have more capital to put in place for these things, which will represent the value of tomorrow, even though it looks difficult today.
I'd like to.
Erik, I would just add one thing. We are continuing to see an acceleration investor appetites in sustainable products. We are across the world. We're hearing from more and more clients. They want to be focusing on more early stage investing too. I believe we all understand the need to bring down the green premium across the carbon footprint. And so I think the surprise is going to be, as Dilhan said, related to green hydrogen. This is going to come faster than people think.
What else is going to come faster than people think? What else are you most optimistic about?
I'm optimistic that the world is finally facing the realities of climate risk, and I'm very bullish on humanity. When the world comes together, when we solve problems, I think how the world responded, how capitalism responded to COVID, the vaccination that was marketed within 10 months and distributed within 10 months from the beginnings of the virus is a great example of the speed of innovation. In vaccinations before this 10-month milestone, the earliest vaccination from concept to distribution was 4 years. And so we are seeing an acceleration what technology can do. And humanity is better for that. And when we are focused, and obviously we had a pandemic, we are focused, but as I said in one of my letters, the existential risk of health is now accelerating the desire of climate risk as an existential risk of the health of the earth. And so we are seeing more and more inputs from investors, from asset owners, from policymakers, from boards and CEOs of public companies, that they're all moving now, and we're all moving much faster than we were years ago. Now, some people could claim we're not moving fast enough, but I believe, as I said in my last letter, that when finance understands a problem, we bring it forward, and I think finance is bringing it forward.
Dilhan, let's put this into perspective. The investment landscape is changing dramatically coming out of the pandemic. Yields are rising, commodity prices are rising, inflation is potentially a threat. How is Temasek's investment posture changing as a result, and where does this fit into that?
I think we've been living with a complex world for some years now, and it will continue to be complex, I think, for much of the next decade. And we're ready for that. So we've come out with a 10-year roadmap, how we want to build a portfolio for 2030. And into portfolio construction is the need for us to invest more in sustainability-focused sectors and companies. As I mentioned, the seven areas are food, water, waste, energy, materials, mobility, and built environment. And we're doing that also because we have existing investments in these sectors. And what we have to be concerned about, as with any other investor, is the value of the companies that we have out 10 years down the road, especially if their business models are not going to be in line with the transitional issues that will need to be undertaken in order to conform with climate change adaptation and mitigation. And it goes into the issue of what's the right cost of capital for these companies. And so we're concerned about that because we have an existing portfolio of many companies, and some of them are in the right sectors for that outcome, and some are in very challenging sectors. For example, we own an airline. And frankly, the only way to address climate change with respect to airline is sustainable aviation fuels or advanced biofuels. And that will take some time before it becomes a reality, but we can't just sit back and do nothing about that. We need to make the right investments to see how we can contribute towards a solution that can help abate emissions from in that sector. So as we think about the next 10 years, we believe that allocating more capital to sustainability-focused sectors and companies is the right thing to do, It's the right thing to do because in the long run, you will get your value in those investments. And we believe it will come in the cost of capital for companies with the right business models.
And Larry, what about you? Stocks are at record highs. The 10-year yield has hit 180. It's backed off a little bit. What's your investment posture?
I'm as constructive today as I was 2 years ago and 5 years ago. I think the innovation that we're seeing from capitalism is transforming how we live, how we work, how we're educated, how we apply medicines. That doesn't mean we don't have problems. Right now the economies are not fully balanced yet. Sectors of the economy are still are not functioning because of COVID. But I believe strongly that markets are in a very good position now to continue to grow. We have record amount of monetary policy, record amount of fiscal stimulus. I've never seen more cash on the sidelines. We are going to live longer post COVID. So the liability of retirement is getting longer. There's a need for more long-term investing. So all the foundations for long-term equity holdings is strong. That doesn't mean there's not inflation risk. That doesn't mean I'm not worried about our deficits. So you can't deny the market is evolving and changing. But I would say interest rates need to go a little higher. And I do believe they will go a little higher, but I don't think interest rates are going to go high to disrupt equity valuations. And so the real opportunity, if we can tackle climate change, the investment opportunities are going to be enormous. And so I look at this as just one of the great investment opportunities of our lifetimes. And in my conversation with some CEOs, they believe for their companies it is too. I spend so little time focusing on the TikTok of the market, the ups and downs of the markets, but all the fundamentals for long-term investing is strong, and it tells me that markets are going to be higher out 2 more years.
Dilhan, last question to you. For better or for worse, BlackRock's performance gets graded every moment of every day. And we can see that grade. It's called the stock price. It's not so easy to see that for Temasek. Your fiscal year just ended, if I'm not mistaken, on March 31st. How did you do?
You have to wait till July to find that out. We'll have a press conference as normal in July, and we'll let you know then.
All right, gentlemen, it has been a pleasure. Thank you very much. An exciting venture that you've undertaken. We're all going to be watching very closely to see how well you do.
Thank you, Erik. Thank you, Dilhan.